Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Tractor Supply Company, ticker symbol TSCO. I don't know if you guys have ever been to Tractor Supply Co., but I have quite a few times. They have a wide range of things, but it's basically like almost like a Walmart for farmers or for people who live in rural areas. You can get pretty much anything you need for either farming, snow blowing. You can buy snow plows. You can buy all sorts of things, seeds. You can even buy, little chickens, like the little chicks. They usually sell them for like 50 cents. And, I think that this could be an interesting play just because it seems like they just have recurring revenue all the time and they make the same amount of money consistently. But I do think that they have kind of a growth problem after analyzing my DCF model. So I'm going to go through the entire stock and kind of explain why I think that, you probably shouldn't touch this, but if they grow at all, you're going to make a decent amount of money. So Tractor Supply Co. currently trades for $54.36. It's up 17.69% over the past year. The market cap is $29.04 billion. The price to earnings ratio is 26.64, and the annual dividend yield is 1.62%. The 21 analysts with 12-month price forecasts for Tractor Supply Company stock have an average target of $58.56, with a low estimate of $47 and a high estimate of $67. The average target predicts an increase of 7.73% from the current stock price of 54.36. The average analyst rating for Tractor Supply Company stock from 21 stock analysts is buy. This means that analysts believe the stock is likely to outperform the market over the next 12 months. So you can see here that they say the majority say buy. It's pretty evenly split between buy, strong buy, hold, and sell. I think that it's probably a safer bet to stay away from it, but there could be significant growth potential. And if you think that they could, generate any kind of growth, I think that this is going to be a buy. But I think this is a very interesting type of company, because it's not practical that farmers are going to buy tractors every, quarter or something like that, right? So they have a lot of really big purchases that help them. But there are a lot of things that go into Tractor Supply too. Certain products sell during certain times. So like I said, the snow related products are probably going to sell during the winter, and they're probably going to sit through the summer in their inventory, which is obviously not good. Overall, I think that the business is probably not a very good business. Just fundamentally, retail type businesses tend to not do as well. But this is a niche sort of business. But, we're going to look at the DCF and kind of break it down for you guys. But overall, from what I just read, the analyst consensus is buy from the majority, but it's a slim majority. So keep that in mind when you're looking at Tractor Supply Co. Here I have my weighted average cost of capital for Tractor Supply Co. of 5.68%. This is with a cost of debt after tax of 0.76% and a cost of equity of 6.538%. After I multiplied each of these by the weight, it comes out to that 5.68%. When we take a look at the model, you can see that I have a projected free cash flow growth rate of 0%, and there's 26.59% upside. So basically, if you believe that they can grow the free cash flow, which they've consistently grown revenue, but obviously costs have increased, then you would want to buy this stock, right? Now, I'm all for getting a good value deal, but I don't think that Tractor Supply Co.'s company is, something you really want to hold for the long term, even if it's a little bit undervalued right now, because they have a track record, as you can see, of an average free cash flow growth rate of negative 11.93%. And that's the average over the last 5 years. So not great there. The average free cash flow also 661,820. That's because in that 2020 year, they made a lot of money, right? And no other year has even come close to that. I think that Tractor Supply Co. pretty much has stores everywhere they can, and they're going to have pretty consistent revenue and free cash flows going forward. With the around that 14 million mark, this is all in thousands, so 14 billion, I guess. So, I think that the stock is probably slightly undervalued, but I still wouldn't want to hold it just because of the nature of the business. I'm not a big retail guy. I don't think they have any monopolistic advantage. I think it's pretty much just almost like an annuity. You can look at it like that. I kind of think this is probably a good dip if you did want to enter. As you can see from the yearly graph, it's just dipped through the floor. Probably a little bit too much if 0% has significant upside, 0% free cash flow growth. But, you have to really think, for me at least, and this is like my perspective on it, and again, none of this is financial advice, but my perspective on it is that I don't really want to own Tractor Supply Co. I don't think it's a great company. Fundamentally, I think that it's going to be pretty consistent, like I've said a million times. I'm kind of, sounding like I'm repeating things a lot, but I just want to make it clear that fundamentally, as a business, I already really don't like retail. That's part of why I sold Walmart a while ago, even though I think Walmart's a way better business than Tractor Supply Co. And I also don't really want to buy a company that has decreasing free cash flow, even if revenue growth is, pretty decent. But that's also inflated by the 2020 number. Oh, actually, it's not. But that 2020 number is still the biggest from 2020 to 2021. And you just had a dip through the floor after that. I do think, and I'm just spitballing here, but I do think the current administration is probably going to be better for some things and really bad for others. So the tariffs are really going to hurt Tractor Supply Co., I think, and maybe that's what's caused the dip, because I'm sure they're importing things from all over for, different tools. You think about how many different people are working on one piece of machinery, right? And, it doesn't offer anything that's really exciting in terms of growth or as a business for me. And for that reason, fundamentally, I just can't touch it, even if I feel like it probably is oversold here. So let me know what you guys think down in the comments section below. I'm really interested to hear what you guys have to say. I think this is an interesting stock, but I'm not really excited about it. You could maybe make 10% and then get out over a period of time, or that 26%, but it's not really going to grow from there from what I can see. And it doesn't seem like they have a lot of things really going their way. So let me know what you guys think down in the comments section below. I read all the comments. Thank you guys for those of you who've subscribed. It really means a lot. And I'll see you guys in the next video. Bye.